It's 10 a.m. here in Lagos. Welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. Let's kick off with the news. Oil prices fell this morning as a prospect of a main U.S. East Coast gasoline pipeline remaining short for the rest of this week led some U.S. Gulf Coast refiners to cut output, denting their appetite for crude. U.S. West Texas Intermediate crude futures fell 40 cents to $64.52 a barrel after gaining 2 cents on Monday. Brent crude futures dropped 45 cents to $67.87 a barrel after climbing 4 cents on Monday. Colonial Pipeline, which transports more than 2.5 million barrels per day of gasoline, diesel, and jet fuel, shut down its network on Friday after being hit by a cyber attack. Colonial said on Monday it aims to resume full operations by the end of this week. The outage, however, has already led Motiva Enterprises to shut 2 of 3 crude units at its 607,000 barrels per day Port Arthur refinery in Texas, the largest in the United States.
And back here, the federal government, in collaboration with the United Nations Industrial Development Organization, have unveiled a policy document on gold mining in Nigeria. This is part of measures to grow revenue and attract investors to the mining industry. UNIDO, alongside Nigeria's Ministries of Environment, Mines and Steel Development, as well as Health, jointly unveiled the National Action for the Reduction and Eventual Elimination of Mercury use in the artisanal and small-scale gold mining sector in Nigeria. They also unveiled the National Policy on Solid Waste Management, as well as National Policy on Plastic Waste Management. The Regional Director and UNIDO representative to ECHOS in UNIDO Regional Hub Nigeria, Jean Bakole, said the policy document has an obligation for Nigeria as a party under the Minamata Convention and would help drive investment in the mining sector.
Meanwhile, the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, has encouraged Nigerian youths to embrace agriculture to become self-reliant and employers of labor. Emefiele stated this during the inauguration of the first national Maize Pyramids and the commencement of the 2021 wet season farming organized by the Maize Association of Nigeria at the Katsina State Township Stadium. He announced that the CBN has put in place several measures to improve access to credit for the youth, especially in agriculture, under the CBN's Anchor Borrowers program. Do take a listen.
The Katsina Township Stadium is the venue for the inauguration of the first national Maize Pyramids put together by the Maize Farmers Association of Nigeria. Present here is the governor of Kebbi State, Atiku Bagudu, who, as the representative of President Muhammadu Buhari, leads other dignitaries like the governors of Katsina and Jigawa State, as well as the central bank governor, to flag off the Maize Pyramids and the 2021 wet season farming.
Today, the maize that was used to create this pyramid was all sourced from one state, Katsina State. So this is an evidence that our farmers are not intimidated.
In his address, the governor of the Central Bank of Nigeria highlights the benefits of the Anchor Borrowers program, just as he encourages young people to embrace agriculture.
The Anchor Borrowers program has proven to be a game changer in the financing of smallholder farmers in Nigeria, as it has revolutionized the agricultural financing and has remained the forefront of agricultural transformation program in Nigeria.
The governor of Katsina State, Aminu Masari, welcomes the choice of Katsina as the venue for the event, and he goes ahead to list what the state has done to put it at the head of the queue of maize production.
The state's agricultural restoration project has placed great emphasis on the development of agriculture through partnership with national and international organizations, and the government alone cannot meet all its developmental needs for the people.
Another financial institution, the Unity Bank PLC, brings a message of encouragement to farmers.
The bank entered into strategic partnership with key commodity associations in Nigeria, including MAN, that's the Maize Association of Nigeria.
A total of 10 pyramids of maize consisting of 50,000 bags produced in Katsina State are displayed here on the ground at the Katsina Township Stadium.
More updates on the commodities market space. Bolande Abaje from Financial Derivatives Company joins us next. Keep it here with us. This is Business Morning. All right, we're now being joined by Bolande Abaje. Hi, Bolande. It's always a great pleasure having you here with us. Well, let's begin with this issue of new COVID restriction, reintroduction of COVID-19 restrictions. What do you make of this, and how do you see this move now impacting the commodities market space?
So it was like a 50-50 chance. We did expect that at some point the government would, look into protecting our economy from, what's happening in India and Brazil. It seems like those countries are finding it hard to, cope this COVID-19 surges despite the vaccine introductions. And also you have news from countries like Seychelles, which is considered as the highest vaccinated country.
Yeah.
Despite this, they're still having, increases in COVID cases. But obviously, people aren't dying. But the fact that COVID cases are still rising despite the introduction of these vaccines calls to question. I think the WHO is looking into that. But on our end here, I think the best we can do as a country and to protect our, economy and business activity going forward is best, to protect or introduce protective mechanisms to prevent the surges. And regarding commodity prices, I'm sure most manufacturers have already priced this in and also found ways to adjust their business strategy when it comes to lockdowns in general. We've been through this for the whole of last year, and I don't expect a significant change in commodity prices. Right now, we're seeing more or less structural changes in or structural changes as a result of increases or decreases in commodity prices.
Yeah, but if we're talking, about protecting our economy from the external factor that you just mentioned, India, Brazil.
Yes.
Okay, shouldn't we be looking at the borders, the airports, for instance?
Yes.
Instead of allowing, just everybody, coming in, all planes coming in, shouldn't that be the major focus at the moment?
Because I think the reports the government released last night, I think it mentioned something about prohibiting non-essential travel. So I'm sure they're looking into, increasing the protective measures within those airports as well. But I think shutting down the airports drastically, it's not really great for the economy, because a lot of us, we're literally a globalized economy, and shutting it down would, the impact or negative impact of that wouldn't be so great. So it's more or less like a gradual, process.
It's like choosing between the devil and the deep blue sea.
Yes.
It's either people will go hungry or leave the economy open and we have health challenges.
Exactly.
So, what's the trade-off?
It's better we take care of our health.
What's the trade-off here?
Well, taking care of our health is, more or less important for the long run, because obviously without health, there's no business, there's no, there's no activity within the economy. And it seems like, COVID is something that we've never seen before. And the rapid or the deadly impact of that is grave compared to what we had seen in the past. So I'm sure the government is, has no choice but to take measures in place. And so we don't find ourselves in, the situation we found ourselves in.
We have bigger fish to fry. We have security problems.
Yes.
Unemployment is raging, inflation is raging, and now we have COVID-19 lockdowns.
Yeah, but COVID was always there. It has always been there.
Exactly. So now there's a resurgence now.
There's a resurgence.
And there's a risk of another lockdown at this point, with what Nigeria is already going to currently.
I know it's a difficult one, but I think the government's hands are tied. There's nothing they can really do at the moment. When it comes to even increasing or increasing stimulus or spending within the economy, I think that's a challenge. And, trying to protect the economy from that lockdown seems like the best option out there. And obviously to prevent, increases in spending as well. So you continue your business activity. Hopefully, they're working on the security challenges as well. With unemployment, they've talked about business or companies can carry on with their work, but they should just be mindful of, and obviously virtual means has, become the new order now. So I don't think I think businesses have more or less adjusted to this kind of.
Can we afford another lockdown?
Anyway,
is it possible?
well, we have to take care of our health first. Now let's look at the oil markets as it is. We've seen the current trend there with the cyber attack, on U.S. pipeline there. So, what is the outlook for this market?
Well, we do not expect any drastic changes in oil prices, just because as much as you're seeing that offset from the U.S. market, you're seeing, increases in supply in places like Iran, which is more or less considered as, number 3, or was considered as the third largest producer at some point. I think it's number 4 or 5 at the moment. I think they increased their production by about 200,000 barrels in April alone, which is a significant number. And, as much as you're seeing that increase in supply, I think it's balancing the, offset or the decrease in supply in the U.S. So right now, oil prices are more or less, staying at about $68, $69 per barrel. Hopefully $70 per barrel, but we don't expect any drastic, changes to oil prices compared to the other commodities in the other global commodities like metals, non-metals, grains. Those are still in that commodity super cycle.
Absolutely. And then one would now ask, talking about the commodity super cycle, the metals, you talked about iron ore, copper, for instance, and then the question a lot of people would ask, because even the crypto market seems to be in the red at the moment. Now, is it that investors are now channeling attention, now going into the commodities market now and dumping the crypto market?
No, I don't necessarily think they're dumping the crypto markets. I think the crypto market more or less is reaching a horizontal point where it's just, maintaining that high. But with the commodity market space, this has been a trend since last year. Most investors have now seen that it's a better investment opportunity. But the only question now is, would this commodity boom bust? We do expect this to happen maybe in 2022, but as for now, as for this year, it seems like it's great for commodity prices or global commodity prices, especially corn. Corn has really increased by about 100%, and this obviously has been attributed to the supply shortfalls moving on from last year, the fact that demand has increased significantly, and also, when you look at the uses of corn, ethanol production, tortilla chips, for example, and so many other commodity products, corn is in significantly high demand, and this has obviously increased its price. And one would just call to question, would this, bust soon? But we don't.
But what about the inflationary impact of this? I mean, with all of these commodity prices going up, there's likely to be some kind of cost push inflation.
Of course, yes. That's the the necessary or the path when it comes to traditional economics. When you have this kind of increases in commodity prices, it obviously translates to the increases in food prices. And well, when it comes to Nigeria as an agriculturally booming economy, we only seek to benefit from this. And obviously, in the short run, the fact that we haven't, increased our production in the short term, obviously would suffer for this by significant increases in food prices or inflation in the near term. But I think the government's, I saw an advert that the fact that the CBN had mentioned, the focus on agriculture, youth, and all of that. So we do expect that they take advantage of this.
Could it be that investors are hedging, using commodities to hedge against inflation?
Yes, because most economies are not offering better options because they're suffering at the moment. So it seems like commodities is the best place to invest at the moment. So yes, it's a great place for.
All right, still talking about the oil commodity and taking it back here now to the downstream sector, where there's a report that daily consumption of petrol is now at about 93 million liters, up from 73 million it was before. Now, if this is true, it means that petrol imported, into the country is about 60 million liters higher than we normally would demand. So can we rightly say now that some petrol products are being smuggled out of the country? And if this is the case, I mean, shouldn't it be time for government to say, look, it's enough with this subsidy thing?
Bye-bye subsidy.
Yes, so it's puzzling news just because, you know, we only consume about 50 million liters per day. And the fact that, you know, they're saying our total consumption is about 93 million liters calls to question, you know, where is the remaining, you know, 43 million liters going to? It means that, you know, some of these marketers are probably benefiting from smuggling these particular products. And it obviously calls to question at its point where revenue is quite tight for the government, why spend so much, about 4 billion naira on subsidies? It doesn't make any sense. And I'm sure, you know, a lot of the marketers had mentioned, you know, the subsidies are necessary to keep prices, you know, the way they are. But I don't necessarily, you know, we don't, you know, think that, you know, the subsidies are absolutely necessary. The money can be channeled to other, you know, sources that is quite needed or needed for. But I don't think, you know, it's something that the government is looking at the moment. They believe the subsidies is what's helping to keep prices afloat. And I'm sure if they decide to remove it, there'll be the, you know, reaction of increases in petrol or pump price.
As usual.
Yeah.
Anyway, thank you very much for your time, Bolande. We do appreciate it. And happy holiday. I mean, tomorrow and next holiday.
Then you're back to work Friday.
Holiday.
Thank you so much.
I'm not going to enjoy that holiday with you. I'm sure you know that. All right, that's Bolande Abaji, one of the research analysts with Financial Derivatives Company. We'll take a break, and when we come back, we'll look at the cement market. This is Business Morning. Well, despite cement manufacturers recording billions of profits in the first quarter due to sales volume and price hike, affordability of the commodity remains challenging, having risen from 2,600 last November to about 4,000 per 50 kg bag in many parts of the country. Let's look at this sector with analysts at Chapel Hill, Durham, Mustafa Wahab. Thank you very much, Mr. Wahab, for joining us on the program. Good morning.
Good morning, Timothy. Good to see you.
So one could say that recovery in cement consumption post-COVID has been impressive. What's your assessment of the cement market in the first quarter of this year?
Thank you very much again. Recall, like you mentioned clearly, 2020 was quite challenging for cement producers, right? We entered, you know, COVID period in Q2, and the impact of that, you know, affected a lot of the economic activities, which, you know, cement producers essentially suffered from. But the good thing for the cement industry is that the industry actually quickly bounced back in Q3 and quarters. But Q1 growth was actually quite solid, better than what we've seen in the last 3 quarters. And that's basically because of the fact that, you know, the growth that we saw in Q3 2020 and Q4 2020 was basically driven by private sector led. You know, those periods were essentially periods where interest rate environment was quite low. So the impact of this, you know, induced a lot of private guys to start, you know, taking loans, you know, from different institutions to push towards, you know, real estate investment, and that's where, you know, the cement producers benefited from, right? But for Q1 2021, I think what basically supported that massive growth was the fact that beyond that strong private sector demand, we also saw, you know, revenue picture for FGN, you know, being a lot stronger, you know, compared to what we saw last year. You know, we are now entering a period where, you know, crude oil price is now more or less flirting with that $70 per barrel level. So the impact of that, you know, is essentially driving, you know, stronger revenue generation for FGN and obviously CapEx implementation for FGN. So the impact of this essentially supported, you know, cement demand also for public sector side. So the impact of this generally is why, you know, we saw that strong performance for the industry in Q1.
All right, Mustafa, what do you imagine is the next growth phase for the cement sector in Nigeria?
So for one, really, I think domestically there is strong demand potential, right? I mean, you know the story. Infrastructure-wise, Nigeria is still backward. Road network in Nigeria is quite, abysmal. I mean, I like that Nigerian government is now sort of embracing cement road. Housing deficit is also, close to 17 million housing units. So these are massive cement consuming projects, right? So we think that, there's this massive, structural cement demand opportunity as far as the domestic market is concerned. But beyond Nigeria, export-wise, we also see, fantastic, solid market opportunity for domestic players in Nigeria. So currently, what we notice is that most West and Central African countries import bag, bulk, and intermediate cement products from Asia. And that's basically because of the insufficient availability of limestone. So in Nigeria, we have abundance of limestone that is close to export facilities. And this sort of portends a huge market for Dansem or Bua or Lafarge to sell. So against this backdrop, what we think is that beyond the structural demand opportunity in Nigeria, we also think that export is the next growth impetus for the industry.
So Nigerian builders have complained vigorously about high cost of cement prices. What would you say is the cause, and how do you see prices shaping up going forward?
Actually, I think the best way to answer this question is to put things in proper context. I mean, I noticed how you mentioned that cement today goes for roughly 4,000 naira per 50 kg bag, right? When we take both Dansem and Boa's number as a Q1, we did one analysis. We tried to check revenue per ton for these two key players, right? And for Dansem, revenue per ton is roughly around 48,000, and that roughly translates to around 2,400 naira per bag for ex-factory price. When you now compare that, what that means is that for you to get cement directly for Dansem, you'll be paying roughly around 2,400. But if you compare that to what you see in the market today of around 4,000, that's close to 60%, markup. So now I just painted the picture that is now clear that really the producers are not to blame for this aggressive cement demand that we're seeing in the market today, right? Now, so this is not to essentially put the entire blame on perhaps the distributor, right? And that's basically because of the fact that we're in an environment or in a community where infrastructure-wise, Nigeria is very poor. Road network is quite poor. So all of this is essentially putting a lot of pressure on distribution costs. Hence the reason why you're seeing that aggressive markup. Beyond that, diesel price compared to the last few years is a lot higher. So we're also operating in an environment where inflation is at double-digit levels. So this is more or less the reason why cement in Nigeria is quite aggressive. But really, I understand where the builders are coming from. I see Dansem and Bua as is actually coming from the distribution side of things. So what I think really is that perhaps once again start to think about solving this sort of infrastructure challenges, we'll probably start to see some sort of moderation in cement prices. But going forward, as far as our engagement with management is concerned, what they make clear to us is that prices are going to remain stable between now and the next few years. That's despite the fact that they're now witnessing some sort of aggressive input cost challenges. So we don't expect to see any material move as far as ex-factory price is concerned.
All right, let's look at FX issues now. How has Naira devaluation affected energy costs for the sector players?
So I'd like to mention first that close to 40% of input cost of cement for players is actually directly from energy costs, right? And usually when you see material devaluation of the Naira, energy costs will typically go a lot higher. So that is essentially what would induce producers to start raising prices. But what we've seen so far is that they only raise price just a little below 6% on average, despite the fact that we're in an environment where Naira is devalued by close to 25 to 30%, right? So for Nigerian producers, what we've seen, what they've done so far is that they've invested heavily in some of the most efficient cement plants across SSA. That's why they are able to manage gross margin obviously EBITDA margin, and the impact of that is not, putting a lot of pressure on price. We've seen Bua, for instance, saying that they are building an LPG plant in their northern plant, just basically to supply energy to that sort of plant. Dansem has also invested heavily on maintaining some sort of nice energy mix. Right, WAPO is also building some sort of captive power plant in Ashaka. So this is why they've been able to manage this significant naira devaluation on energy costs, effectively.
Now, Dangote Cement has announced some kind of new share buyback. Do you think that would be successful, and how would the market react to it?
I think the quick answer to that is that the market will probably react positive. If I take you back quickly, right, in December, Dansem announced that they are going to be buying up to 10% of their share, back from investors, right? And so what they did is that they did way below 1%, but they eventually did it, right? I think they bought roughly 40 million units of their shares outstanding, right? So now they are now seeking another regulatory approval, to sort of continue that sort of scheme. Whether or not it's going to be successful, depends on the cash position of Dansem. And the last time we checked, free cash flow for Dansem is actually roughly around 150 billion naira. Beyond that, Dansem is also now they've announced to the market that they are seeking to raise close to 300 billion naira in another corporate bond, which is obviously going to be the largest naira bond that has been issued in the history of Nigeria, right? So the impact of this is obviously going to support cash position for Dansem, and perhaps induce them to actually go through with the buyback program.
All right, we can rightly say that Nigeria has gone from net importer to exporter of cement. What opportunity would you say this offers for AFTA?
So yes, I mean, by the time Nigeria signs, once the AFTA program starts to kick off, I mean, the truth is that that would open the opportunity for Nigerian producers to start exporting cement. So just so I put it in a better context, right? Installed capacity in total in Nigeria today is roughly around 50 million metric tons, and demand in Nigeria is something close to around 21 million metric tons. So that's still leaves roughly around 29 million metric tons of used capacity, right? So if Nigeria should go ahead with the AFTA, that will just sort of open the opportunity for domestic players to start exporting cement towards neighboring West African, Central African countries. Like I said, all these neighboring countries, they rely heavily on Asia to import limestone or bulk and bag cement, but I think they can do it a lot cheaper if they can start buying from Nigerian producers.
Yeah. So tell me, which of the domestic cement players would you advise investors to focus on?
Nigerian producers are actually one of the most profitable cement players across FSA, and that's basically because of the fact that they invested heavily in one of the most efficient cement plants. Hence the reason why we are seeing this aggressive gross margin and obviously EBITDA margin, right? Dangote, is the leader in the market, obviously both by installed capacity and by volume, and obviously Dansem is also the market leader as far as cost is concerned. So I think that Dansem is in a very good position, to compete favorably, whether from cost point of view or from price point of view. They are also in a great position, to tap into some of the most biggest opportunities that I just highlighted earlier as far as cement demand is concerned. Beyond Dansem, I also like WAPO a lot. WAPO has, gone through a nice journey. The company actually sold their South African business, which has been margin dilutive, and they used the proceeds of that company to, fund or refinance their debt position. WAPO's debt is now down to less than 50 billion from roughly 300 billion in 2018. So the impact of this is actually supporting finance charges and obviously EPS growth, right? So, I favor these two companies. Bua is also a fantastic company, really. And the company has gone through a nice journey, investing aggressively in new cement plants, one of the most efficient plants in the company. And, we also, are looking, towards, those sort of shares, closely in-house in Chapel Hill.
In other words, there are still lots of opportunities in this three big players in the market. Thank you very much. Thank you very much, Mustafa, for sharing your
thoughts. Okay.
All right, thank you for your time, Mustafa. Mustafa Wahab is an analyst with Chapel Hill, Durham. Okay, let's check with the market numbers there. Anita, there was particular interest on Tier 1 banks, Zenith and GT Bank in particular, and that changed the negative narrative in the equities market yesterday. Could this be, a comeback of the bull into the market?
Yeah, thank you, Chimi. Well, I would say it didn't really come as a surprise, because the bull is actually trying to stage a comeback. Don't forget, the first start of the week began on a negative note. That's last week. We started Tuesday with a 3-day stretch of profit taking, but then on Friday the market began to come back into positive territory. We sustained that on Monday with a start with a more than 0.5% increase on the all share index, and that's all thanks to the banks. Renewed interest in Tier 1 lenders such as Zenith Bank, Guaranteed Trust Bank, Access, as well as some 18 other mid-cap companies led to that rebound. We gained about 59 billion naira yesterday, and that, of course, is also evident on the volume of transactions there. We had more than 324 million shares valued at 3.28 billion naira. And that's, of course, is because some investors are beginning to look into the equities market, because they see that some of the gains, some of the losses that were recorded in the month of March, so they're trying to price in some of these shares and then expect a higher return on their investment. So when you take a look at the sectoral performance, it was slightly mixed. But we can see the major driver there were the banking sector components, just like you mentioned. They lifted that sector up by nearly 3%. It was also supported by the insurance sector, as well as some industrial goods sector. So, okay, so we'll be joined by David Andorin from he's a stockbroker at ICAP Securities. Thank you for joining us, Mr. David Andorin.
Thank you. It's always a pleasure being with you.
Okay, sir. Yes, sir. So thank you, sir. The market has begun the second trading week of May in positive territory. So what could be driving the renewed positive sentiments at the markets?
Okay, last week the market declined a little bit. That was not a result of decrease in investors' confidence. What really happened was that so many stocks, especially the major stocks, were marked down for the purpose of the payment of dividends last week. So that was what caused the decline in the market, and it marked the renewed interest in equities. And so that renewed interest was what manifested yesterday when the market opened strongly, and so many stocks appreciated yesterday. So we are still likely to see the market with high demand for equities, considering the fact that as the fundamentals of the economy improve, then investors' appetite for risk increases. So that essentially will be the underlying driving force that will sustain the momentum in the equities market now and into the foreseeable future.
Okay, so now we have just a day before the market goes into a 2-day public holiday. So what do you expect for the banking sector today?
Yeah, the momentum is expected to continue because the positives that are driving the fundamentals of the economy are still very strong. The crude oil market is still firming up. And then if you look at the forecast for the Nigerian economy for this year, it's actually increased the figures from about the IMF increasing from about 1.5% GDP growth to about 2-point-something%. So those factors are still strong and are capable of sustaining the fundamentals of the economy, which will trickle down into the capital market. So for these few days in which the market is going to trade this week, we'll still see a market with reasonable momentum.
Okay, so thank you, Mr. David Adori. It's a pleasure to have you on our program. That was David Adori from is a stockbroker at High Cap Securities Limited. So we move over to the unlisted securities markets where we still see bearish sentiments. The NSI, the NSD NSI is down by 0.85%. Of course, bearish sentiment, and of course that is because there's less liquidity in that market. So also the volume of shares thinning out 7.56 at the value of 402.46 million units. Of course, the deals there just a shy away from 80. Then we move over to the FMDQ securities market, where the most favored there was the 27th of May 2035, had about 5 deals there at about 1.46 billion naira. And also at the Treasury bills market, it's also lackluster interest there. Just 3 deals for the April 14th of 2022, and then also at the central banks the central bank's bill, not much going on there, nothing at all. So Chimeze.
A quiet market there, the fixed income market, but the equities market, there seemed to be some kind of optimism, but we didn't see, or we're not seeing that optimism in the global market, because this morning we saw a lot of stocks in the global Asian market, the European market, all trading in the red. But of course, you know, Nigerian market does not really go the trend of the global market. So we'll see what happens at the end of today. Thank you, Anita. Yes. Right, we'll take a quick break, and when we come back, we'll do an opening call to London. All right, let's see what's happening out there in London. Of course, the FTSE 100 is a classic sea of red, with every constituent dropping in early trading following losses in Asia-Pacific markets. Juliana, what's pushing those stocks to the red zone?
Good morning, Chimeze. It seems like it's inflation. Inflation is fueling the fears of investors. As you said, the FTSE is suffering from triple-digit losses. You're going to have to go down to the FTSE 250 to find any significant gains this morning. It's taken its cue from Wall Street and Asia. On Wall Street, we saw a massive tech sell-off. I believe the Nasdaq was trading down about 2.6%. Similar scenes of a nosebleed in Asia. We did have some data from China showing that the consumer price index rose 0.9% higher than it was in the previous year. And tomorrow we are getting data out of Washington about US inflation, and there are some concerns that perhaps the Federal Reserve may tighten up its monetary policy should consumer price indexes go up. So I think that's what's pushing the sentiment today, Chimmy.
And NatWest was also down 3.3% after the UK government cut its stake in the bank last night, selling about around 5% of the company's stock. What more can you tell us?
Well, yeah, this is the second time in 8 weeks that the British government have sold a bit of its stock of NatWest, formerly Royal Bank of Scotland. They quite famously, quite controversially, bailed the bank out about 14 years ago when it was in serious trouble. But what we've seen over the past few months is that bank stock has risen high. NatWest has risen by about 24%. So the British government, who were keen to try and claw back the billions it spent on COVID-19 funds, have decided to sell its stock. This 5% stock was worth about £1.1 billion, and a lot of economists do predict that by the end of the year, the private shareholders may indeed be the biggest shareholders of NatWest. At the moment, the banks still have about the British government have about a 54% stake, even though NatWest are trailing down since since the British government have sold their stock. They are still performing pretty well. Q1 results were great, and it's all pointing to Q2 being even stronger.
And in the meantime, AstraZeneca faces a bruising clash with investors at its annual meeting today, with a protest vote expected against a CEO pay pocket. Are we keeping an eye on this?
It's an interesting story, actually, about Pascal Soriot. He appears to have the backing of most economists, most people in the industry, and I would say that's really because, of course, AstraZeneca have done absolutely fantastic over the past few years, really trying to, or being one of the pharmaceutical giants that have managed to save the world from the pandemic. Last year, he received an eye-watering pay packet of $15.5 million. That is a lot of money. However, according to those of his senior peers, I can tell you I'm not one of them, he should be getting more money. So there is a little bit of surprise as to why shareholders are planning a revolt today. A lot of people saying it's not really down to the pay packet he received last year. I believe there is a new law or some sort of policy that's going to be coming in place where a lot of these pharmaceutical CEOs could have their bonuses raised. So in Pascal's terms, it could be raised from about 2.3 million in bonuses to 12 million. And investors are asking, investor advisory groups are asking investors not to vote against it. But like I said, considering we are still in the midst of the pandemic, he does have a lot of people on his side, and it wouldn't be the right time to pick on a pretty successful CEO who has, returned growth over the past couple of years.
So I can say AstraZeneca share is the one to watch today, and we look forward to that AGM later today. We'll talk to you later on the show. Okay, let's look at the crypto market. Well, Ladi, it was also a sea of red this morning for the crypto market. What's cooking?
Oh, yes. Let's look at Coin 360. It's all red. Bitcoin, 55,005. Ethereum down. It's a sea of red. The crypto market is not spared today. Let's look at the market cap, $2.41 trillion, down about 3.74%. 24-hour volume for the whole crypto market is up 20.73%. Bitcoin dominance down again, 42.92%. Let's talk to Solomon Amunde now, digital market analyst. Hello, Solomon.
Yeah, good morning. Good morning, Ladi.
Good morning, Solomon. So this new trend in the market, 30 days, Shiba Inu up 30,000%, Pig Finance up 56,000%. All of them have over $1 trillion supply. Is it that the scammy coins are the new profit movers now?
Okay, I would say it's more about the education level of the masses. Most persons that come into cryptocurrency, they are all about making profits. And even when they call you on a daily basis, they are asking you about shit coins. You hear them asking you SafeMoon, Shiba, Pig Finance, and all that. So it's more like crowdfunding. When you have so many persons contributing, even if it's $100 to buy a particular token, the only thing you see is the price keeps spiking higher and higher and higher. So that's what's happening currently. And we can also see, based on Shiba, yesterday they got listed on Binance, and I think 2 days ago they were listed on Poloniex, and last week they were listed on MXC Exchange, and FTX2 is about to list them. I think they've listed them already. So right now these exchanges, they're also proving to the masses and the crypto community that they are all about volume. Whatever the community asks for, or whatever the masses request for, that's what they would list. And Shiba has over 10 billion transactions daily. So in terms of volume, over $10 billion in terms of volume daily. So that's massive. No exchange wants to say no to that per se.
So how long can we see this trend continue?
Yeah, whenever it's a bull market, like when a bull market currently, expect to see so many scams, like so many. Same reason why Dogecoin is pumping. So we should expect this to still last for like 4 or 5 months. And once the dump starts, the dump will be massive. Currently, so many persons they were able to convert $100 to over $100,000 trading Shiba within a space of 4 months. And you can imagine what would happen for those that would jump in by October, November. They would lose like millions per se.
So you need to be careful so you don't buy the top. All right, Solomon, thank you so much.
Yeah.
All right, Chimi, there you have it. Top odds by market cap, BNB down about 5%, ADA, Cardano down 8%. Doge is the biggest loser, down 13.44 after that appearance by Elon Musk on SNL. And right now, it's been called a crypto tsunami. Over 247,000 investors lose $1.7 billion. I hope you're not part of those investors, Chimi.
I will never be. You know that. You see why the regulators are saying you better be careful. This is a very volatile market. By the way, something happened yesterday. Binance, which is the largest cryptocurrency exchange, briefly suspended withdrawals yesterday. What happened?
Well, you know, most of these exchanges, they have to do maintenance. You know, they have so many transactions going on. So sometimes they have to halt, you know, trading just to upgrade, you know, because it's a very, it's not easy running an exchange in this market because some of them actually suffer a lot of hacks and stuff. So, yeah. They have to do those upgrades.
Anyway, the world still remains caution in playing this market.
Exactly.
And if you must play, seek financial advice from the professionals.
Very important.
All right, that's it on the program. Thank you for watching. I'm Chimize Obi Iwago, and happy holiday.
And I'm Ladi Williams. Thank you for watching.